Hello and welcome to this special interaction with the top management at Lupin. We have both the promoters of the company with us, Nilesh and Vinita, as well as Ramesh, who handles the finances at the company, is with us. As always, they join us after their quarterly results. Thank you so much for taking out time for us. Vinita, let's start with you. Now, when I look at the US sales over the last few quarters, it just feels that, it is declining. Can you just firstly tell us what is happening? Why was it at 121 million? Is there a one-off? And what is the annual run rate that you would look at?
Yeah, sure. No, so definitely in the last couple of quarters, we've had challenges on the US revenues. But in this first quarter in particular, we took a few steps that really help us set up the business for profitable growth going forward. On the one side, we felt that we had a very high level of trade inventory, so we pared down inventories in the trade. We took shelf stock adjustment in a couple of key products to ensure competitiveness. In addition, we had guided to this in the last quarter. Over the last couple of years, as we have seen price erosion, in particular around oral solids, we were planning to get out of low margin and negative margin products, again, to improve our profitability going forward. And we executed that. During the quarter, we got out of approximately 15 products, which allowed us to also do a bit of optimization on the operational front. So we executed on significant workforce planning in our plants to take out 14% jobs to help us get to the right cost position, ensure competitiveness going forward. So that is the reason why you see a significant impact, the impact of paring down the inventories, shelf stock adjustment, as well as getting out of a few products that will help us from a margin perspective going forward.
Got the point. But, you could just tell us about the new launches as well. You have, I think, inspection lined up before Spivira comes in. Can you just talk to us about why second quarter, and more importantly, one or two products this year are pretty important in US, and for that, how the company is preparing?
Yeah, so the new product launches are critical to drive growth, right, with price erosion in the older products. And as we look at our launch calendar in the next couple of quarters, we have Suprep coming in September. That we are fully prepared to launch. We also, thankfully now with the Somerset facility clearing the OAI, within a record 3 months. We're also in a position to bring in potentially other products out of Somerset. So we expect a couple of niche products, diazepam gel, as well as a nasal spray that we are forced to file on. That doesn't come in this fiscal year, but early in the next fiscal year, that's Cobal. And then, our largest product in the near term, Spiriva DPI, that we are forced to file on. We expect to get approved and launch in Q4 this fiscal year. We have a goal date within August, and feel pretty good about the responses to the agency. Our device manufacturer was inspected by the agency, and from our perspective, the inspection went fairly well. So at this point, we have responded to all of the queries of the agency and believe that we are in a very good position for that product approval. We are in full swing with launch preparedness to manufacture launch quantities to launch the product in Q4 the fiscal year. We also have another important event from a new product launch standpoint, our biologics. We have an inspection that is lined up in October by the US FDA to inspect our first product, pegfilgrastim, that we hope to get approved in this fiscal year and hopefully again launch in Q4. So we expect Q4 to be a material quarter for us, with in particular with Spiriva as well as pegfilgrastim.
Got the point. Just the last word on US, and then I'll move to the other two speakers as well. Vinita, you just mentioned about the strategy and how you have changed the strategy in the US. So what went wrong earlier? What is the sort of pricing erosion? And what's the new strategy for the US market?
Yeah, so the strategic plan that we've been working on executing has been really transforming the business and portfolio from the simpler generics, oral solids, to complex generics, areas like inhalation, biosimilars, and complex injectables. And I'd say that what has taken us longer is that transition from oral solids to complex generics. I'd say, as an organization, we probably in the larger companies had the largest exposure to oral solids, just given that we are the third largest company by prescriptions dispensed in the US, have material share across major oral solids. We had, our base business had the most exposure from, the price erosion, which has been the highest in oral solids. So what you see is really a legacy business, issues that have been challenging for us in the past quarters. And as we look at, portfolio complex generics rolling out in the next couple of years, when I look at fiscal year 23 for sure, but also fiscal year 24, 25, more of the inhalation products and injectables, biosimilars coming to market, we are rebalancing our business to more complex generics, which really will help set us up for long-term growth, both on the top line as well as more so on the bottom line going forward. The US in the past was always, higher than the company average from a profitability standpoint, and we're very confident of getting back to that position going forward.
Thanks for that, Vinita. Let's go now to Nilesh. He looks at the India formulation business pretty closely. Nilesh, when I just look at the numbers for India formulation versus some of the other peers that have declared, it's looking low in terms of what others have done really after a long time. What really happened in the quarter, and on long-term basis or the yearly basis, do you expect to beat the overall industry growth?
Yeah, so the Q1 performance was definitely lower than some of the leading peers. It was ahead of the market, but lower than some of the leading peers. So the market degrew minus 1.8%. We grew 1% versus that. But year on year, sequentially, of course, we grew. What we've seen is, the big therapy areas, inhalation, cardiovascular, diabetes, that's where the market has been sluggish. The market actually degrew 3.1%. We degrew minus 2.6% in that same time frame. And this is reflected in an increase in market share overall for us. So we, 10 basis points, our market share has improved in India. Again, I hate qualifying our India business performance. This has obviously been, it was expected given that we had a large Q1 for the industry and for Lupin a little bit last year. But suffice to say that for the next 3 quarters, we would expect to be back at that double-digit kind of growth, obviously growing at 20 to 30% ahead of the market. We've invested a lot in the market. We added 350 people in the last quarter, in Q4 of last fiscal. We spun out 3 new divisions. So lots of avenues for growth. And again, I think we're still the underdogs in this market, so there's significant room to grow.
Right. Which are the new areas that you're looking at in the Indian markets, Nilesh? You've constantly been innovating, constantly been going into new products, newer areas, brand extensions as well. What are you looking at in terms of India market and especially the branded portfolio?
So some of the new divisions we launched were in, a new division in the diabetes space, but importantly, a new division in the CNS space and another one in the anti-infective space. In areas like CNS or dermatology, even in women's health, we are under-indexed. There is room to grow, and that's where some of the focus would be. Obviously, we have the big 3, like I mentioned, inhalation, diabetes, and cardiovascular. But these are some of the newer avenues for growth as well. We also see as a broader healthcare service provider in India, and I think that's where diagnostics comes in. Some of the digital measures that we are putting in place as well, those come in as well. So we do see a broader integrated play in India.
Okay, so that was the management of Lupin telling us what were the adjustments and one-offs